Good morning, it's Travis Bard, and welcome to July. We're halfway past the middle mark of the year. Summer is upon us, and the real estate market just keeps perking along and doing okay. I want to just talk quickly this morning about some numbers. We're not going to geek out too much, but I want to give you some basic numbers. We also had a conversation a couple weeks ago with Lawrence Yoon, who is the chief economist for the National Association of Realtors. And as I watched different economists and their predictions and that, Lawrence has been very accurate through the years. So I like his information, I like his data, because he tends to be very, very accurate and very realistic in the market. So here's a couple of things that he highlighted for us. Number one, existing home inventories continue to be very low. In the Prescott market as an example right now, and this is the whole Tri-City, Quad City area, we have 986 active listings. To put this in perspective, last year we sold 4,086 homes in this market area. So we have less than 3 months worth of inventory. Currently, we have 471 homes under contract. So they're in escrow, they're going through inspections, contingencies, things like that. That puts us basically at 2 months worth of inventory. If we have 471 homes, 986 on the market, those homes at the same pace would sell within 2 months. That's low inventory. That's why we see things staying solid and staying strong. This is a national phenomenon, though, the low inventories that we're seeing. It's pervasive across the U.S. A couple other things. Construction of new homes continues to be very strong. We see different neighborhoods and subdivisions in the Prescott area, the Tri-Quad City area, plus all of the new construction out in the unincorporated areas that maybe it isn't a subdivision, people building custom homes or semi-custom homes for themselves. That construction continues to be very strong. Pricing, we've seen things fairly stable for the last 3 to 4 months. That's a reflection of interest rates. Interest rates have stabilized in the 7% range. Jumbos are a little below that. VAs are a little bit below that. Typical conventional loans are just a little above that. But one of the things that was interesting is the prediction is for rates to come back down by the end of the year. A number of economists that we follow are seeing inflation start to be under control. There's still some questions about it out there, but the predictions are that inflation will be back to the 2% range end of fourth quarter of this year, beginning of next year. That will allow them to back off a little bit on interest rates. One of the things that we watch for its impact on pricing of existing homes and new homes as well is the rental market, and rent rates have stayed solid. They've increased and stayed solid. That impacts inflation, because if we have a 65 to 68% home ownership rate, that means that those 35 to 33% of the people are renting, and that, as rents go up, that has a big impact on inflation. So as those stabilize, that helps inflation as well. So in a nutshell, inventory is staying very low. That protects us from a bubble. That protects us from things crashing. We're not seeing any uptick in distressed homes in our market. So that's not a source of inventory that's coming to the market. And there's a basic stability. And I know that there's a lot of people that are talking out there, a lot of experts that are saying that there's stuff on the horizon that bodes ill for the housing market, but we just don't see it right now. There's too much demand, there's too little inventory, and we've seen stability in interest rates for the past few months. So with that's what we see. I just wanted to share that for you as we jump into the first part of the third quarter of 2023. It's amazing how fast time is going. If you have any questions, don't ever hesitate to reach out. We're here to share what we know, what we see, and do everything we can to help you with what tends to be the largest asset that most of us own. That's our home. That's that real estate that has a huge impact on our net worth. And if you don't own a home yet, this is a way to start to build that, to build stability and to build a hedge against inflation. And those are the things that we'd love to talk to you about, see how we can help you. So please don't hesitate to reach out. And until the next video, hope you have a great summer.